Today is Tuesday, August 13th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, Alan Bush, ADMIS Senior Financial Economist, and Mark Bowman, ADMIS Senior Global Market Analyst. Mark Soderberg, starting with the grain markets this morning, we had a USDA report yesterday. What stood out the most to you?
Well, first off, in corn, no major surprises. Yields up, acres down, and production a little bit higher, but very much within a range of expectations. But to me, the USDA just continues to be very aggressive with their export forecasts, raising old crop exports 25 million bushels and new crop another 75 million bushels to 2.3 billion. That despite the weak start that we've seen so far. So lower production estimates out of Argentina and Europe do support that reasoning. However, I think the export demand is going to have to prove itself over time, and we have a lot of catching up to do. In beans, by far the biggest surprise with the higher production forecast, my production estimate going into the report at 4.565 billion bushels was the highest of all the analysts surveyed through the various media outlets, and mine was even too low compared to the USDA 4.589 billion bushel figure. Yields were raised as expected. However, the big surprise was the 1 million increase in harvested acres, where the average guest was looking for just a very slight reduction. I look for prices to remain under pressure, trying to attract better demand while also discouraging further expansion in South American plantings, which begin to kick off here next month. And wheat, the biggest surprise was the 34 million bushel drop in spring wheat production versus expectations for just a very modest increase. The lower production, a result of the modest drop in yields and over a 550,000 acre drop in harvested acres in North Dakota and Minnesota combined. So look for Minneapolis to outperform both Kansas City and Chicago moving forward.
Mark, with the report out of the way, what will drive prices the second half of August and as we wind down the summer months?
Well, to me, the job of the market right now is to build in better demand to absorb this year's anticipated record yields. We'll continue to monitor crop ratings, weather, and ultimately yield reports once harvest gets going, but we'll really be keeping a close eye on how U.S. demand kicks in, particularly from China, who has been very slow to shift over to importing beans from the U.S. We need to see demand accelerate soon in order to reach these lofty USDA usage projections. And we've seen some modest announced sales here this morning, but obviously the market wasn't particularly impressed. We did see some corn sold to Mexico and soybeans to China. And nearly every day we see these spreads continue to widen out, make new lows. So essentially the market's telling farmers just to store whatever you can, and hopefully we get some sort of post-harvest rally here on some weather problems in South America.
Thanks, Mark. Alan, how did the PPI come out, and how have the markets reacted to the numbers?
Well, we did have the producer price index coming in a little weaker than expected. Oddly enough, though, some of the metals did not respond as you might have expected. Actually, the silver is lower, so it looks like the dominant fundamentals that are supporting gold are the prospects of a Fed that will soon pivot to accommodation in September. The Fed will either cut by 50 basis points or 25 basis points. Right now, the market's saying 50. Also for gold, there is the flight to quality influence in light of the ongoing geopolitical tensions in the Middle East. So it does look like the price of gold will continue to advance. And actually, we're really not that far from historical highs. It's a different story for silver. Silver will probably be supported to some degree by easier credit policies, but the more dominant bearish impact is the weakening global economy. And I think that will cause silver to work sideways to lower. And for copper, increasing probabilities of a global economic downturn will dominate. And the price of copper will probably roll back under $4 again, $4 a pound. And the main trend still appears to be lower for copper. So look for higher in gold, sideways lower in silver, and lower for copper.
Any other key reports this week that we're watching, Alan?
Okay, well, tomorrow we'll have the July Consumer Price Index guessed at up 0.2%. The July retail sales report on Thursday, and that's expected to be up 0.3%. And then on Friday, the August Consumer Sentiment Index, and that is estimated to come in at 67.
Mark Bowman, yesterday's USDA report also covered cotton. There was this bullish surprise for cotton. How do the numbers change the outlook for that market?
Yes, that was bullish. Both U.S. and world production and ending stocks came in at the low end or even below the low end of trader expectations. We saw a rally right off the report, but then it gave up most of those gains by the end of the day and is actually lower on today. The report showed U.S. production at 15.1 million bales, down from 17 million last month. USDA lowered planted area to 11.17 million acres from 11.67 million last month. And they revised yield down to 840 pounds per acre versus 844 last month. And this brought ending stocks down to 4.5 million bales versus 5.3 million in July. This is still up from 3.15 million the current year, and it is still the highest in 5 years. Likewise, world ending stocks fell to 77.6 million bales from 82.6 million last month. They are still the highest in 5 years as well. So it creates a less bearish setup than prior to the report, maybe give room for a possible bottom for the market, at least until harvest.
And Mark, how about the sugar market? How is the Brazilian sugar shaping up?
So Brazil is the world's largest producer of sugar, and they are in the peak of their harvest and crushing season right now. It started off strong in April because the ground was dry, which made it ideal for harvesting and crushing cane. But these same dry conditions are expected to eventually pull down the production from last year. Unica updated their second half July report today. They released that this morning, and it showed second half July production for the center south sugar area at 3.61 million tons, which was down 2.2% from the same period last year. This was up from 2.939 million in the first half of July and up from 3.27 million in the second half of June, making it the strongest production period so far this year since April. However, production has a tendency to peak during this period. And cumulative production is currently running 8% ahead of a year ago, which is the smallest increase since the marketing year began.
Thank you all. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.